What's going on, my dudes? I hope everything is going well for you this early week. All right. Well, yeah, I apologize for missing Friday. I had a early vacation to attend to. It was very fun. It was a nice kind of like sit back and relax and not look at the charts type of thing. Yeah, this morning I was messing around with the new chart layout and stuff like that, but other than that, been really kind of like, doing some interesting type of moves here in regards to scalps and stuff like that. Maybe I'll show you that another day. But yeah, I did a scalp long this morning and it was phenomenal. It was great. Thank God. I actually was able to close that out and profit. Okay, so I'm going to get into it. Okay, so I usually don't have that open. All right, so I'm going to start with the MAC and the MACD. I'm going to start with the market cipher indicator here. So as you can see, it's maybe about 3 hours till candle close, but we do have a fresh sell signal. That is not good. There is some conflicting data here because we do have waning sell pressure here. So although in regards to the daily, I actually give more onus to the blue waves themselves, especially because it's above the 60 mark. Usually once there's a cross down of the 60 mark, it's really hard to get the momentum reversed on the other side. So for perspective, last time we had a sell signal at that level. That is where I sold the majority of my crypto. See, right now I'm trading, but I'm trading in USDC, I'm trading in USDT, so I'm I'm winning or losing in profit through fiat means, quote unquote, because it's just a peg, it's just USDC is just the dollar peg, USDC and USDT as well. So anyway, but going back to it, yeah, last time we had a sell signal of this caliber, excuse me, it was this one all the way back here. So, oh, you might notice that the support and resistance indicators are a little bit different. I screwed up. I accidentally closed one of my indicators, my original support and resistance indicator, but I don't know where the hell it is. I don't know what it was called. Apparently I didn't like favorite it on TradingView or anything like that, so I was kind of scrambling and finding an adequate support and resistance indicator that was comparable to what I had. So yeah, these little dots here is my new support and resistance indicator, and so far it's so good. It's actually like doing pretty interesting. I was using it as a form of an indicator for my stop losses and take profit zones when scalping on the lower term time frames today. It was pretty good. Okay. Um, all right, so I'm going to go to the candles real quick. So we did have developing resistance here above 24.5. Here was the major mark right here at 24.2, which currently the daily is unfortunately under. As you can see, we have pretty substantial wicks to the upside because there were some phenomenal 4-hour and 1-hour resistances that popped up at 24.87, 24.6, and 24.5. All of these new resistance lines happened within a 5-day span. Some popped out during the weekend, some were on a Friday of last week. But yeah, so far, as of today, support is holding at 23.875. So as long as price is above this level, I would have to consider this zone right here a um, line in the sand zone. So usually when you have bullish engulfing candles like we had on the 12th of August, which is right here, hollow candles are bullish candles, bodied candles are bearish candles. Okay, so this is kind of a new layout. Really, at the end of the day, I want you guys to really focus in on the exponential moving averages because people kind of, I've been talking to a few people, like relatively new traders, and they are more so focusing on the candles themselves as opposed to their indicators. So, um, that kind of screwed me over a lot starting out, where I was like, oh man, I got to get the wick bottom of that candle in order to get a really good trade. Or I was like, no, 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 not at all. You just need patience, and you need to figure out where your fast moving exponential moving averages are on a time frame of your choice. I mean, it could be the daily, it could be the 4 hour, it could be the 1 hour. In my case, I like to use the 37-minute. I like to use the 15-minute for entries and stuff like that. So really at the end of the day, I want you to see where these exponential moving averages are as opposed to the candles. Yes, the candles are important. It's data. You can read the data, you can decipher data, but at the end of the day, you really need to know where those exponential moving averages is, because those are important for entry points and all that kind of stuff. But anyway, going back to the TSI, because I was talking about the market cipher indicator, now we're talking about the TSI. So the TSI is actually showing consistency with the market cipher B indicator. We are seeing a yellow signal line. That is usually a sign of weakness. In my perspective, I do kind of expect to see a more consistency with downside price action, just due to how it currently is. But now the slow moving average is still bullish. As you can see, it's not red, it is blue. So the bias is to the bulls still. So seeing these consolidation periods, from a bullish perspective, you could see it as an opportunity to get a better position. But in cases like this, because we have a sell signal on the daily, I would refrain from any significant daily positionings myself. I want to see more so a bounce point on a more intraday level, more of on the 4 hour, 2 hour, or 1 hour. The daily trend is to the upside still. As you can see, the exponential moving averages are blue, so these are no longer resistance. This is for sure support. The 9 EMA, yes, it's currently getting tested. It was tested today. But it is still support until proven otherwise. If you see a daily candle close below the 9 EMA, then you can be more so worried and more so looking at consistent positionings to short. But at this time, from a daily perspective, it's just more wise to actually just let the market play out and really try to find a bounce to kind of initiate along. But given, as you can see, how the candle bodies are bullish, but the outline and the wicks are bearish. As you can see back here, we had a similar instance. So we, theoretically, if all else stays consistent, and even back here, we noticed that there was a couple of like bodied bullish candles, but with wicks, red wicks and red outlines. That just means that there's still more to go, that we have yet to see a true bottom. Now, history doesn't have to repeat itself, but from what I'm looking at here, we might get a couple of days of consolidation. This is just a theory, but as you can see, we had 1, 2, 3, 4, of these candles. We had 1, 2, 3, so we're on 2 here. But also, as you can see, it didn't stop there. We had bearish engulfing candles, and then we actually had, actual wick candles that indicate reversal, things going on down here. So it's not set in stone that it is to the downside, but just given, as we see in history here, these trends, this trend here, this trend here, given how those trends played out, it doesn't stop at 2 negative candle wicks. It doesn't stop there, in my opinion. Given keeping in mind the exponential moving averages here at 23.39 range roughly, and the fast moving average at basically 23.9. I do have those as points of interest, but at this time, I have to be a little bit more bias bullish. This consolidation phase could last maybe a day or two, maybe a day or three, and then at that point I'd look for like a swing long position to maybe even come back to these zones here, maybe like at the high 24K mark, or that's kind of like where my mindset is at from a daily perspective. All right, so let me go to the actual indicators on the daily chart here. So on the MACD, we did have a ditch effort of the bulls to push the histograms above the zero line. So everything is above the zero line. So that's why I still lean uh, bullish. I still have a bullish bias. Now, we could see expansion. Given how weak this dump was relative to the previous, there is an opportunity for the bears to take advantage of this weak pump, come back down and create expansion to the downside. That's still possible. But because the exponent the indicators here, the MACD indicators, the signal lines here are still above the zero line, I'm still leaning bullish, a bullish bias. Um, Okay, now the TSI is saying otherwise. We are seeing here that as long as price is below $24,079, that we're gonna see continuation to the downside. So that is a key number to keep in mind. 24K. So as long as price on the daily chart is below 24K, we have problems. And on the daily, we had not one bearish divergence, but another bearish divergence and a signal sell line. So that is concerning to me. This gives me some kind of feeling, vibes, if you will, of the last time we were up here as well, because we did have. Let me zoom all the way back here. Yeah, we didn't even have legit divergences. We had a bearish divergence here and no true divergence, frankly. It was more so the rejection off of the 200 and 100 EMA zone that really kind of kicked off this bearish move that has led us to this heinous bear market. We are currently below that spot at 51% from all-time high. Oh my goodness, I don't even want to even look, but we're down here. We're down in the dumps. Yeah, 65% overall. Okay. All right, so let me go back. So this is the MACDX showing a sell signal and a bearish divergence. That is not good. Also, the RSI is ready to cross down. It has been in the neutral zone for some time. Higher lows are still in play. We got a low, higher low, higher low, higher low, higher low, higher low. So until that trend's broken, I can't be macro bearish. We are still riding along this channel line. As you can see, these two channel lines, which is like this supply line here, the green line, and this top side sell line right here. Overall, we could potentially in the future see a retest back here of this zone. There is confluence around this mark, probably, yeah, I'd give it like 22.7, 23.5. Those are um, important marks to keep your eye on. All right, so what does the TMA say? So the TMA is actually showing a curve to the downside, still just as the RSI is showing. The TMA is kind of an augmented RSI, really, so that's why they look rather similar, but they calculate data a little bit differently. So that's why I like to keep it. But anywho, yeah, in regards to like oversold territory, we have not tagged the overbought zone, so that's something I am kind of keeping my eyes on. But overall, yes, we have been in a bearish trend. We're currently in the orange section, so we haven't gone to DEFCON red just yet. Not gonna lie, I like to keep my eyes on DEFCON red zones, if you will, because that's where I like to just buy spot, hold, and yeah, just accumulate my favorite altcoins and stuff like that to hold for long term, and ultimately maybe even like convert them into Bitcoin or Ethereum later on when the market really does show advantageous conversion opportunities. All right, so I'm going to go to the 4 hour. I've been on the daily for far too long here. All right, so okay, from the 4 hour perspective, I'm going to go to the Heikin-Ashi candles right here. Heikin-Ashi candles is actually showing the beginning aspects of bearish money flow, just essentially money leaving the market. That's not too good from my perspective. Now, usually when you see things like this, we do get a bounce here, so I wouldn't mind seeing like a buy signal, either scalp longing that buy signal or just letting it play out until I see an actual sell signal below the zero line. Because when money flow is red and you see a sell signal on the within that zone, it's actually a pretty good scalping opportunity. So if I were to like just take off, let me mark it so I don't lose it because I usually lose stuff like this. Okay, so I'm gonna give the other candles here. There it is. All right, so when money flow is red, let me just let me shrink the TSI real quick and enhance this. Okay, so when money flow is red and there is a sell signal, um, these are usually great times to actually short. So if you had shorted all the way down to the 100 EMA, that would have been a 2.76% net gain on your trade. Now, you could use leverage. Now, this is not financial advice. It's just something that traders do. They look for these sell signals and they just like initiate their moves, and they look for key support and resistance levels to then use those as exit opportunities. But overall, yeah, I love sell signals, especially when so for example, if the money flows green and the green buy signal is above the zero line, that is a great time to enter. Um, Conversely, if the money flows red and you see the buy signal below the zero line, that's a perfect time to short. Especially like on higher term time frames, like more respected time frames, like the 1 hour, 4 hour, stuff like that, 3 hour, 2 hour, stuff like that. That stuff really does well. All right, but anyway, so going back to it, negative money flow, and that's from the Heikinashi perspective, is the traditional candle perspective. We are seeing somewhat of a similarity of that, but in a different format. We are seeing money flow wane to the downside. So we are seeing this like weakness kind of come to fruition. All right, so let me go to the TSI on the 4 hour. So the 4 hour TSI has been bearish for some time now. Essentially, basically a day and a half it's been bearish. Okay, and as you can see, the slow moving average is crossing the zero line. This to me is actually pretty dangerous because usually when the TSI crosses the zero line, that parabolic moves do tend to happen. So we did have a move like this, but it was kind of like a dead cat bounce to ultimately kind of come back and create like a pattern of a lower low instance here. So um, we do kind of have this resistance kind of going off right now and being respected. So I don't necessarily like that. Now, it's not a guarantee that this resistance line will draw out. But as far as like long-term macro swings, like, buying spot, holding it for a week, 3 weeks, I'm not going to be doing that. I'm more so looking for shorts in instances like this, or I'm just going to wait it out until I see the actual trend broken at this time. Um, yeah, but as you can see, that's just the current intraday trend. There is this underlying yeah, you can even go far back, probably through here. That'd make more sense, especially because it's like on a lower term time frame. So yeah, there's essentially like two trend lines to keep your eye on in regards to the TSI, in regards to resistance. So we have this like intraday thing going on, but we could also see wicks above it. Ultimately, we do have two sets of resistance lines to keep our eye on in the 4 hour time frame regarding the TSI. All right, so let me go to the other indicators here on the 4 hour. So we do have waning sell pressure. For now, we could ultimately see kind of like a little bit of a recovery, but at the end of the day, um, the indicators are pointing to the downside, and usually when they point to the downside, they try to cross the zero line, and those zero line crosses are when volatile moves happen. So even though price is consolidating to the upside, it probably will be choppy, and ultimately we might trigger a lower highs instance. That is just conjecture at this time. There's not enough data. Who knows? There could be a buy signal in the next 12 hours or so to then break past 25.5K. But at this time, I have to lean bearish because the indicators are showing bearishness. But ultimately, yes, there is a little bit of relief coming to the bulls aid. So there could be potential for a scalp long opportunity in the lower term time frames. Alrighty, so 4 hour has had not one, two, but three bearish divergences, and finally the slow moving average here on the MACD-X is bowling out and trying to cross a zero line. So usually when the red line crosses below the zero line, it just means that it's easier for the bears to push the price down. So something to keep in mind, especially if you are wanting to do any longs or spot longs at this time. If I were you, from my perspective, not financial advice, this is just from what I'm looking at, I'd give it a little wait and see until I consider buying spot. All right, so RSI, we are bouncing within the neutral zone. Um, I don't like that the RSI crossed below the 50 line. That's like the line in the sand for if things are bearish or bullish. Now, I don't really get concerned until I see a 4-hour candle close below the bearish control zone. So this zone right here is the bearish control zone. I know I have it the color of like bullish. Ultimately, when the RSI is in here, that just means that the bears go ridiculously crazy and it's just so easy for them to push the price down. I ultimately like to wait for a cross up of the 34 on the 4 hour specifically because these are great spot buy entries or just even swing opportunities with little to no leverage, not financial advice. Okay, so, all right. Now, this is pretty telling here. The 4 hour, for the first time in a while, created lower lows on the 4 hour, and the TMA broke below the slow moving average. So what I'm expecting here, this is actually the most definitive indicator out of all the ones that I've seen. It does kind of conclude with like my initial assumption was that, yeah, we might see a relief rally, but ultimately we're going to get rejected and see lower prices. That's kind of like what I was kind of coming to the conclusion of. And the daily kind of gave us a little bit of semblances of that, but this is really giving us a good overview of that prediction. Okay, so what I'm expecting here is the teammate to kind of finagle around here and ultimately get rejected from the slow moving average, which is the blue line, and then come back down to then test the oversold zone here, something like this. That's my theory at this time. Just due to the excessiveness of the bearish divergences, it's really hard for me to assume that this is just a fake out and no, we're going to come back here and go oversold. I don't believe that, frankly. We've had our day in the sun. We had, if you will, the tag of it back in the 8th of August, and actually we even went as far as to go higher from that point and create these bearish divergences to even create higher highs from that point. So we're kind of at the tail end of that pump and its consolidation phase for a little while. That just makes sense overall in regards to what's been happening in price action. All right, so from now, this is like intraday level stuff. This is like, we're only holding our positions for a few hours type of thing. All right, but yeah, we are getting a buy signal on the MACD. Okay, we are getting a potential buy signal on the Heikin-Ashi version of the MACD. We're also getting a bowling out of the money flow. As you can see here on the 1 hour, we are getting lower instances of waves coming down. So we do have this like general support coming up. Now, if it's broken, so for example, like if price, comes up and then it creates like this bearish trigger wave, basically a smaller wave than this one, I do expect this trend to actually break and then kind of reset everything. So far, this trend has been held consistent for what? The past, let me mark this down for you all. Essentially for the past week, this trend has been your friend. Now, the trend is your friend until the end, so what I'm telling you right now could be outdated given a break of that trend, but ultimately I do feel that this trend will get respected and we'll actually see a buy signal to ultimately push price up again, which would kind of validate the intraday 4 hour, basically create like a pump to the upside. Essentially what I would be seeing here would be, like a pump, maybe. It's just, conjecture here, maybe like a pump to the upside, maybe to, you know, the slow moving averages to ultimately come back down and then create lower lows from that point. That's kind of like what I'm preparing for personally. Um, but yeah, so ultimately I do see, and I'm going to go to the 37-minute time frame because the 37-minute time frame already has that buy signal. It's a precursor to the 1 hour, so we could probably get that by the time I'm able to post this. But keep in mind, the exponential moving averages are red, so they have flipped to resistance. So if you're going to be, you know, gung ho and scalp longing this, you got to be very careful. Like you have a very small margin of error here. Just from my perspective, I'm more so looking forward to tomorrow, just because yeah, like we're probably going to see prices lower in this particular zone, probably like at 23.5. This is just like my opinion, not fact. But I do feel that like price will eventually tag the 100 EMA again, and that's where I'm going to be doing like a spot long or maybe even like a swing trade. I'm not too sure exactly just yet, but that this isn't an ideal time to long unless you're scalping like on the 3 minute or something like that, you know, on the 15 minute even. You know, that's you know, going to be difficult to really land a good shot here. Um, but yeah, all right. So let me go to the 1 hour stuff here. So we talked about the MACD for a little while. Now let's talk about the TSI. The TSI is showing that the overall slow moving average trend is to the downside, but we are kind of getting some fight from the bulls ultimately. Can this particular trend hold? That's something to consider. If you do see this trend break ultimately, it's going to be a pretty volatile move to the downside to ultimately reset everything. So when that move does happen, in my opinion, due to the overarching resistance from the top side like this, um, or maybe even like if you want to go wick low, like from the wicks as opposed to the slow moving average resistance like here, um, this will eventually break either to the upside or to the downside. um, you want to be on the winning side. Okay, so this is actually a really good um, trend to keep your eye on, like which one's gonna win, the downside trend or the upside trend. Um, Given how the daily is bearish, I am leaning bearish. So if anything, I would kind of just wait for that this support zone to break and then kind of initiate if I have the time. Because usually sometimes when this stuff happens, it's like not even when you're awake. You know what I mean? This is like China. This is like, you know, Singapore initiating these moves. Um, you know, so it's if you miss it, you miss it. You know what I mean? That's the beauty about the market. It's 24/7. You could trade it on the weekend if you want. I don't condone it. You know what I mean? Um I don't lobby for you guys to do that at all, but people do trade on the weekend and they make a pretty good living and stuff like that, you know? But you can also, you know, trade whenever the hell you want is what I'm trying to say. All right, so let me go to the 1 hour indicators here and kind of just like cap it off and close it out here. We are getting a buy signal. We do have MACD histogram momentum waiting from the downside and trying to make a move to the upside. So that's a good sign overall. We do have a a bullish divergence on the 1 hour. So that's really interesting. So maybe the next couple hours we can see some pumpage. So the TSI says as long as price is above 24,072, we can expect price to continue to the upside. Now, I don't like the positioning. I usually like to set in my buys below the 25 line around here, but you know, the TSI is indicating that there is some room to the upside still. So that's nice to see overall. So the RSI here, oh, I can't even open it. There you go. The RSI does have this momentum to the downside thing going on right now. So if you were to long, you have to keep this into consideration. Now, you could do something like this. The 1 hour is a little bit more sketchy. I like to use the 4 hour, but you could do stuff like this where let's say that, you know, you got a long and you lucked out. The RSI is going in your favor. You got the cross up from the slow moving average, and you know price is right here, or the RSI is right here, and you're in profit. honestly, if I were you, I would close it out. I don't care if you're greedy and you're like, oh no, it could go up another 2%. Like, nah, dude, like just close it out. You won. Just move on and you just wait for a better entry. Um, yeah, but from this perspective, I'm gonna see what the 4 hour looks like. Actually, the 4 hour is a little bit cleaner. It is a little bit of a parabola, right? So, nah, but I usually like these diagonal lines do pretty well. So I would say where they all touch, the touch points on the 4 hour. That's better. That looks way cleaner. So like you could actually wait for, if in fact it goes your way where it breaks above the slow moving average, I think your take profit one should be where the slow moving average is, just in case. Take that profit if you're in profit. If you're not in profit, because this is risky stuff. I don't even know why I'm even talking about it. It's like honestly the safest thing to do would just wait until the RSI comes up here and then uh yeah, short, and then have your stop loss, tight, because if it does reverse your way and the RSI does break and it becomes support, then you now have a great position for a macro swing long. So there you go. Anyway, TMA time. Let's go. All right, so TMA is also, oh wait, no, that's the 4 hour. No wonder I was like, this looks familiar. So as you can see, the slow moving average is pointing to the downside and it's about to cross the 50 line, which is pretty bearish. Given the consolidation, I do expect the TMA to get rejected off here at some point and come back down here. And at that point, I'd look for divergences on other indicators to then get a good swing long position. At this time, momentum is to the downside, so I must respect it as such. Okay, I'm going to leave it at that. I appreciate you taking the time to catch up with me in the technical analysis and stuff like that. Yeah, let me know what you guys think. Yeah, if you think I'm full of shit, let me know. If you like this information and you find it valuable, let me know. It'd be great to hear from you guys. All right, I'm going to cap it off at this time. I hope you enjoyed your day, and I'll talk to you tomorrow. Take care. Bye bye.